This is going to be a review for Thursday the 10th of July 25. Just want to go over in order everything that I was looking at today and how I executed, just because there were a bunch of good things, also a bunch of things that were easily avoidable, and yeah, and a bunch of things that I could have just avoided doing overall. And yeah, so I'll just go in order through everything I was looking at. So starting off overnight, this is the daily candle today, obviously, and we just had this situation play out. I'll open the 1 hour chart on the right so we can kind of compare. So on this time frame, you can see all these smooth highs up here. You can see we have this short-term high on the left. We're then taking it out with this intermediate term high and then putting a short-term high on the right of it. And I'm seeing this as a high time frame market maker buy model, original consolidation, short-term, intermediate, short-term, selling off nicely. This is also market structure-wise, we have this being a intermediate term high with a short-term high on the left and right of it. And then above that, we have another intermediate, we're both with shorts on the left and the right of it. And then once we get down into this area, we start putting in a intermediate term high here that took out this short-term high, making this a long-term high. So high time frame market structure is bearish, and we are putting in these long-term highs, short-term high, intermediate term high, put in for first stage of this market maker model. So we had the original consolidation, this is first stage, and this offered a beautiful short opportunity, which I caught. So that was the short, and then I was thinking, okay, well, if this was first stage, then I'd be looking for second stage. So I was kind of looking, I wanted to be bearish. On the daily, my draw is lower still. We have these relatively equal low weekly lows down here. And just sitting slightly below that is this daily bullish order block. Sorry, it's not the right one. Daily bullish order block somewhere in here. You could use this, which we have already referred to, but also somewhere within this range, you could possibly even refer down to this or to this particular one as a propulsion block. But in any case, there is reason for us to head back down here to reaccumulate, because this is a previous area of accumulation before heading back up and taking out this high, which I'm expecting us to do eventually. And I just really like the framework of this market maker buy model, where I'm kind of expecting, so original consolidation, short-term, intermediate, short-term, and then, yeah, the first stage, which would come down to here, and then look for that second stage and reversal. So I was looking bearishly, is what I'm trying to say. But took a bit long to say that. But anyway, so after this daily closed bearish, I wanted to see the midpoint of this wick remain open, especially seeing as we had printed this long wick. I see that narrative as they're enticing traders to be long. So everyone was buying up at these highs during this London and Asia session over here. So in this area here, we had just printed this long daily wick. Everyone was buying up at the highs. Smart money was selling up here. So they're accumulating a short position at these highs above these buy side pulls from whoever was enticed short, and then during this consolidation down here, we're going short, having their buy stops anywhere inside of this range, and then especially above these highs. So I assumed that smart money had been accumulating a short position all the way up through this range, and then obviously selling off. When we traded down to these lows, we did take out some nice liquidity down here, but we fell short of this really key pull, and the sell side sitting below that previous week low. If you notice also, we failed to reach EQ of this dealing range on this drop date down, which is another signature that we may actually be looking to accumulate at a premium, seeing as we're being held at a premium this entire time. I still think we're likely to keep this high intact and sell off, but as I mentioned, this long wick, the narrative behind it I saw this as meaning that there are trap traders up here. I wanted to see the midpoint of this wick remain open. So if I draw out the midpoint, I'm just going to estimate it approximately there, slightly below actually, about there. So I'll make that a dashed line and make it grey, just 1. And this should only be visible on the low time frames, ideally. So this particular line here, I was thinking we should remain below that. And then when I drilled into the lower time frames, I'll put the 15 on the left right now. Throughout this day, we're consolidating. This is ahead of FOMC minutes, really range bound. There were some cool trades in here, just recognizing that we were in range bound conditions. I was able to catch shorts from up here and longs from down here, and that works really nicely. Then we traded higher for the rest of the day. I recognized that, okay, if we're drawing up, I want to be short somewhere around this point. I'm going to draw out this EQ of the range is there. And so what is sitting at this level right here? Well, if I drop down into, let's say, the 5 minute, you can see, okay, we've got all this buy side, then we have this nice little ledge sitting right up at that level at a premium. So I figured that I'd go short exactly here, and it just fell short of my entry there, and then I got in as it ran up into this area here. So I think my fill was approximately, it was at the 20s actually, which does make sense. Initially I was going to have a limit sell right above these highs, but it didn't really make sense because obviously if we drop back down, we're likely to at least push a bit above that. And when we do have a institutional level such as the 20s, which we have right here, price just about always heads to that level. And if we draw out that 20 level throughout the day today, you see we referred to it multiple times, there, dropping and consolidating around that level. If we're anywhere in proximity to this level, chances are we're going to reach for it. That's what I'm trying to say. So I ended up getting short at exactly that liquidity level right there, the institutional level, and that offered a fairly decent entry for what I was looking for. I then went to bed, went to sleep, and I had my stop loss sitting just up in this area. Just up at a premium above this high. Not thinking that we should really get up here, because if you think about it, if I'm expecting us to stay below the midpoint of this wick, sure, it could wick a little bit above, but you wouldn't want to see it spin long up there, and it should really just smash straight back down. So when we ended up over here, coming really close to my stop loss, which was sitting right there, so my stop loss is there, and then selling back down, I woke up and just happened to check the chart and figured that this was a great time to jump out at break even. So right there, jumped out. That was a really good move. I just want to quickly identify why this was a bad trade to take in the first place. And this is something that has been standing out to me as something that doesn't work particularly well, especially in something like gold, is trying to short a rally, for example. Like, try and catch it when it's in a clear directional move. I can't remember exactly where I would have done it earlier. Let me see. There have been instances in the past anyway. I can't exactly think of where. But there were plenty of instances where we'd be in a really directional move and it'd be like, oh cool, I think this wasn't a trade I took at all. But I'd be like, oh cool, I think this order block's going to hold, or I think, this fair value gap's going to hold, or whatever. Or I think we're going to super above this old high and then go low. And then I'd take a entry while we're in a really directional move. And that's essentially what I was doing right here. Sure, I expected this to hold, but we're in quite a directional move, and I was just taking a fairly blind entry, despite the fact there's really, really obvious buy side sitting up here. Like, this is a impulse high before a big down leg, and then we drop to this discount of the range, and we spend all this time consolidating at a deep discount. when we go to a premium, they didn't leave this high so deep in a premium for no reason. They left it up there because they don't want people to trail their stops to a discount of the range. They want people to trail their stops to a premium of the range. And as you can see, we're tapping into that here, and we're likely going to rip up, take that out again. Obviously, this is the high time frame, intermediate term high invalidation. But when there isn't, I think what would make this scenario actually okay to short from this level is, say we had, maybe we had the same high drop down, but then at this level there was like some equal highs there, and then we sold off. Then maybe you could be like, okay, it's actually more likely now that we do stop here, maybe head up to there, and then sell off. So I think you really have to pair these kinds of entries. Like, sure, the dailies suggested that, we're likely to remain below the midpoint of this wick. But unless there is a liquidity level that would support that idea, then it's not a trade worth taking, because at this point, they've just dropped to a deep discount. Everyone's sold down here, and the stops are all the way at this high, which we went straight to. But in any case, really good job with closing out the trade when I saw that we had head so far up, and it wasn't because it hadn't hit my invalidation. It was because I recognized that, well, if I'm expecting it to remain below this line, and it's very, very clearly not doing that, it's broken multiple highs above EQ, it made a lot of sense to jump out. Plus, on top of that, the nail in the coffin for me was the fact that 2200 had opened up a new 4-hour candle, and then we dropped to a discount below that candle. And so right away at this point, I was like, there's no way I would sell right here. With us being at a deep discount of smooth highs, and sure enough, we head back up. That brings me to the next trades I took. So this was during the London session. I was looking at this area in here. And if we look across at the 15-minute real quick. So at this point, I was bullish. We hadn't hit this high yet. It was quite clear that we weren't very bearish at all. And I really liked how we had this range. So I liked how we had all these smooth lows down here, which I'll mark out. Yikes. Just make that so it's a bit easier to see and smaller. So we had all these, Anyway, I'm just marking out the fact that this is liquidity. Below these lows, there's a shit ton of liquidity, and we clearly dropped down and accumulated the sell side before hitting high. When we hit it high, I was watching how we've got this low to this high. We didn't hit EQ, but we also hadn't hit the external range yet. We then hit ERL, and then that becomes the range, and at this point we drop down to that discount. So this is where I was watching price, and what I wanted was us to drop down to minimum the 2300 open. So on the hourly chart, that's a nice bullish order block. Hourly candle open, as you can see here on the 5-minute, hourly candle open, and then we drop down below the sell side and rally back up. And then we obviously have this being the 15-minute CSD. We don't even touch it right here. We do touch it further over. But essentially in this point here, I was thinking, cool, we've got this previous area of accumulation inside of this order block. Anywhere within this range, I'm really, really keen to get long, and I was very bullish in this range, which I did end up catching a small long in this area over here, but I'll get to that eventually. But as you can see, we fell short of that. I was watching in here, ready to go long, had a limit order set there. I was ready to add a bit more on like a 3-drive pattern down below these lows, but it never gave it to me and rallied up. Really good job here for myself though, because I remained very patient. I didn't get involved and I just let it go. And I figured, well, I've also got a short idea from this area, so I'll just wait for that. Or if it drops back down, then I'll get long. Throughout this range, not much was happening. However, I did take a trade. And this is where we get to the next point that I need to fix in my trading, is taking suboptimal trades just simply because the trade idea I wanted wasn't given to me. So my original trade idea was, cool, I want to go long like this, target buy side, and it never gave me that entry. So then at that point, we run up, we barely take out the high. At this point, it's like kind of 50-50, but I'm thinking, well, you know what? I'll just tap the high, it'll drop once more back down, and then I'll rally. Despite this being an intermediate term low, I figured if we're at the end of the trend, hold up. If we are at the end of the trend, it could still break the intermediate term low, make one more high, and then sell off, which we didn't do, but that was my thinking. So I figured, okay, well, maybe this could be a good short. I didn't do anything through here. Then as we got into this area, I started seeing, okay, this is looking heavy. I reckon it's just going to drop to these lows. So I took a short in this area. Also, despite the fact we're below the 6 a.m. open. So right away, that's going against my the key model that I've been looking at recently, which is using those opening prices to determine premium and discounts. When we're below the 4-hour open, that is a discount. So I shouldn't have been going short here. We then have this rally up, and I'm thinking, okay, well, we've got these relative equal highs. This could still be a nice short if we get like a run up above these highs. So can't remember exactly where I was getting involved, but I did take a short somewhere in here, which got taken out. Or if it didn't get taken out, no, that's right. I would have taken a short here, got taken out, got back in short in this area, seeing that we got 1, 2, 3 drives. As soon as we started dropping below and hit that 6 a.m. open, my 3 drive model is that following the hourly candle open, I'm looking for 3 drives, and in this case we've got these 3 right here. 1, 2, 3. And the idea is to get short at this on the super of this high with a stop loss at the 5-minute ATR. And then as soon as we hit the 6 a.m. open or the hourly candle open, the stop loss goes to break even. And from my back testing of this model, essentially break even would be that previous high that we just souped above. But it's really based on wherever my entry was. So if my entry was high or low, I just put my stop loss there. And yeah, so really this should have been a break-even trade. I had a pretty good entry about up here, but I figured that, oh, you know what, it's probably going to, it might retrace a little bit, then it'll sell off, despite the fact we're just taking out this low, and then yeah, it just runs up and takes me out. So it wasn't my original stop loss, but still like minus half an hour. It was completely unnecessary simply because I didn't want to move my stop loss from here down to here. In fact, my stop loss is probably all the way up here. So it was a really useless loss that was actually against my trading plan. So following that, I was like, okay, well, I was trying to short below the 6 a.m. open, but now we are above the 6 a.m. open, above the 7 a.m. open. There are kind of smooth highs up here, but maybe we're going to open up, go straight up, trap people long, and then sell off. So as soon as we got this down closing candle, I relatively impulsively jumped back in short about here, and quite quickly got taken out on this run up. That wasn't a high confidence trade. It wasn't a high confidence trade. As I mentioned, I wanted the long from down here. I only wanted to go long from down here. I'll leave these on for now. I either wanted this or I wanted a short from somewhere up here. But those were the 2 trades I was looking for. And at this point, we're in the middle. So I was thinking, okay, well, maybe I'll trade down to this entry. And these are just not the trades I was wanting to take. Had I just waited for this, I could have avoided getting chopped up in here with these 2 losses and just taken the long. So following that, we do end up getting post 7 a.m. open. We have another 3-drive pattern that I didn't really see or look at, nor would have had the confidence to take because we did leave these really smooth highs. But then, eventually sold off. There could have been the post 7:30 entry model where we have that's being halfway into the hour, clear bearish order flow. We even have the 3 drives and we're above the hourly open, so that would have been a perfectly fine short in this area, in this fair value gap, trusting the high of the hour is in, and we are likely to sell down and make the lower the expansion of the candle. So that would have worked out perfectly fine. Then leaving this breakaway open, resulting in a nice sell-off. As we dropped into the 2300 bullish order block, I did buy as planned, and I made a few mistakes in here. I did want to accumulate more of a position. I had, I think, 3 or 4 micros on. I wanted to add a little bit more down about here. But when we started leaving all these smooth lows, I started looking at that thinking, okay, this is beginning to look like the low is actually already in and they're accumulating in this range. We then get the spike down, and I was like, no, actually, I'll leave my limits buy down here because it's surely going to come down here and knock me in. And then it runs up without me. I'm like, oh, damn. See, I knew that would leave this low intact, and then we've already accumulated. Now it's going to close up here and then keep pushing up. So I ended up buying the extra 2 contracts that I wanted to buy all the way up here, which makes absolutely no sense. It's not below the sell side, and I couldn't stomach, having that much worse of an entry that I wanted. So I ended up, instead of that, buying all the way up here and having that much worse of an entry than I wanted initially. I'm essentially chasing, despite saying to myself that I didn't want to chase it, and I just let it go without me. So I did end up closing out up here when I realized that there was a dumb move for just a paper cut, but still. Then at 8:30 on the drawback down, I didn't want to make the same mistake. I added 1 contract on and there, keeping my stop loss at ERL, and caught this move up, having these drives up towards this high. Pretty high confidence would hit that. However, when we fell short, I got stopped out just here, trading my stop loss nice and tight, which is all good. And then we ended up chopping around a bit and selling off. So the lesson from this is really just not to try and take suboptimal trades simply because it didn't hit my initial expectation. Also, I thought of this at the time and I knew it, is when I have a point of interest, such as down here, as long as my entry is below a key sell side pool, it's perfectly fine. You can accumulate anywhere below a sell side pool. So anywhere within this range would have been perfectly fine to accumulate despite having these equal lows. My stop loss is comfortable with it being down there, so I should be perfectly happy with buying, let's say, right here instead of buying right at the highs. We then had this extremely aggressive sell-off just after 9:30, and this is where I could have definitely avoided another loss. So it's now post 9:30, very clear bearish order flow, smooth lows, perfectly smooth lows, but this was the area I was looking at before, and as I mentioned, I wanted to buy down here. So as soon as we hit that level, I bought, and it just keeps on rolling over. Takes me out. I then took a relatively random trade, thinking, okay, well maybe this is the 3 drives, so 1 drive, 2 drives. I bought right down here with a stop loss at that 5-minute ATR and just got stopped out. And after that, just left it alone, and it hasn't done all that much. So yeah, the major lessons from gold today are really just, if you've got a point of interest, don't fade a strong directional move unless there's a really obvious liquidity level at my point of interest that I can trust is likely to be souped and taken. So if we had something like that, and then we had these highs, then I could be like, okay, well, I can actually sell right here and trust that it shouldn't come up here. But if there's nothing else above us, then chances are it's going straight to that high. as we did. And then if I've got a point of interest and it doesn't hit it, don't go around trying to short and long in this area. So yeah, going forward, I really want to see this high remain intact, potentially even this high remain intact. There is a new day opening gap that I believe could be key. Something I've been looking at recently, where we have the new day opening gap of a previous day that was rated. And the one I was specifically looking at, let me see. So this did take out this previous day high. So we've got this one in here, quite a small one, but we have a previous day high that was rated on this candle here. You can barely see it, but that did take out that previous day high. Now we refer back to that new day opening gap. Once we drop below, looking for it act as resistance, and that's actually how I caught that short. But then I was thinking, okay, well, what's another really key pull we've taken out? And I identified that as being potentially this one over here. I don't know if this would actually be a good one to refer to, but I figured that lines up with my point of interest at the moment. And, you know, I can just give it a go and short there, but I don't think I will anymore. I think that doesn't sound like a good idea. There are, I think, the only instances where this works really well is when we've only just taken out that previous day high, and then the first time we drop below it, it's acts as resistance. Same as here, we've just taken out this previous day low, and so say we manage to get all the way back up here and get above it, then you can look for that as support. Yeah, so I'm going to jump over to NASDAQ. Really beautiful trades on NASDAQ today. So to start with, overnight, this previous day high swept out using that same thing I was talking about before. We have that previous day high taken out, but we also had this previous day high, which was a public holiday as well, which I'll get into, so I'll delete this one for now. This previous day high, this is a public holiday. We then have a new day opening gap up here as well, something like that. And I figured that, okay, we've taken that out. I want to see that act as resistance. And looking at the 15 minutes, I saw that, okay, well, we've traded up into it, and now we've closed back below. So I figured I'd get short right at the close with a stop loss above that high, and that gets tapped out and rolls over. So I don't know, there's probably just incorrect usage of stop loss for this scenario, or the fact that there was a holiday. I'm not sure why, but that's just something that happens. That's not too important. What is important though is what happened within this range, which was pretty cool. I will drop down to the 1 minute, which I'm already on, go over it. So obviously we have the 23k sitting just here, so really major institutional level, first time breaking above it for a while. And when we break above institutional level like this, we want to see it reach 100 and 200 points pretty easily. We did hit the 100 number right there. We did not hit the 200. And then we broke back down below it. When this happens, I like to see, okay, I got the narrative of, okay, we've got breakout longs above 23k, and now the market's going to drop back down to the same thing as on this side, to 100 points below. So there, and 200 points below to clean up below those levels. So very high probability would reach down here. We fell short of it, left these smooth lows. Also, we've got the New York midnight level sitting down here. So another reason to be short biased. We had never hit that level on this day during regular trading hours. So very high probability. And I'll put that dotted. So I wanted to see the shorts. That's partly why I was pretty confident in this. I thought, sure, we could take out this high once again, but I do much prefer the idea of us hitting that 900 level. And then we have the narrative of the PM session. So this was the FOMC minutes at 2 p.m. I'm going to replace, I've got the numbers on there. Let's see, like that. Right, so we have 1 p.m. and 2 p.m. both the opening prices at the same level. This indicates it being an original consolidation. Similarly, the big word down here, 11 and 12. So I saw this as original consolidation. We then have, just using this, we have 23K, so that institutional level, consolidating below its really clear breakout above this level. So what's going to happen here? With the original consolidation, and now we're tripping in longs. So now retail is buying the breakout. We then get a nice retest of that 23K, more retail buys. This gives the narrative that smart money is accumulating a net short position. So if smart money is selling in here, selling up here, and selling in this area here, we've got areas of accumulation of the shorts. We then continue to work our way higher, and then they continue selling. Engineering smooth highs as well, rolling over overnight, dropping just back below that 23K level briefly overnight, leaving more equal opening prices. Midnight at a nice deep discount. Then 2 a.m. opens up, we then rally to a premium above 2 a.m. and then have a slight pullback ahead of 6 a.m. 6 a.m. starts hitting higher from 6 a.m. So right away, we had a premium above 6 a.m. I'll zoom out over here so we can see what we're looking at. So 6 a.m. is sitting at a premium. Same with 7 a.m., right to a premium. And then we get to 8 a.m. So this is where I got thrown off a bit. I figured that, okay, we're at a deep premium. I am looking for this short level to be hit. I want to see us at the 900s. And we're at a deep premium. And then 8 a.m. opens, begins dropping low right away. I saw that as, okay, that's a bit funny because I'd like to accumulate above 8 a.m. open, but maybe this is just like a big hourly up close, and then we're going straight back down to the 7 a.m. low, which we did do. And that should have been something I was paying attention to, is as soon as we hit that hourly candle low, do we want to head back up to that 8 a.m. open, to that premium? But I see this rally up here. This is at the 8:30 news, unemployment claims, and then it fails to reach the 8 a.m. open, drops lower, takes out these highs. We had SMT on the highs as well, and I figured that, okay, this is the exact signature I'm looking for a short. And because from my backtesting, when we failed to hit an opening price, that indicates the 4-hour wick is in. But usually it's not in the situation where we spend the entire time below that opening. So I got short. I got short in this area in here. Added to the shorts in here as well. Barely took any profits and ended up taking a loss in this area. So I was still adding to my shorts in this area here. And eventually it just runs up and it stops me out all the way up here. For a small loss overall on the day. Partly because I took a few partials in here, then I was adding back in and ended up with a small loss. That was avoidable because it wasn't super obvious yet, the narrative, because we were below this opening price. But from my observations, I recognized that we'd fallen short of that opening price, and that we did have a premium above the 6 and 7 a.m. price. So I think this was an alright short. But I think if I'm taking one where it's suboptimal, I need to be extra observant as to the reaction when we do hit those previous hourly candle opens, such as this one, and especially once we stoop out the previous hourly candle low. So I was still thinking bearish. I was still, pretty high conviction that we would head down to the 900s, especially with the narrative, as I mentioned before, of the previous day. I'm going to jump to regular trading hours real quick. But just keep in mind, we've got that 8 a.m. open, as you can see. We ran that out just going into the 9:30 open and then spiked up and dumped. But if we look at just the regular trading hours, we get a really nice picture of the market maker sell model. We have the original consolidation below 23k, that breakout, and then smart money is accumulating the shorts in this area here, and then in this area as well. And then when we open at 9:30, we're opening above buy side, aggressive drop back down, and right away I recognized, okay, this is exactly what I was looking for. We just happened to take out that 8 a.m. high. Once again, there was, I believe, SMT with the high up there as well. And so I was very confident of taking shorts in this area. I think I caught a short from right there. So pretty early on, I did jump in short, taking profits at these lows, and then wanting to add back in this area. I was watching level-wise how we had the 50 sitting just here, but the fact that we hadn't retested it yet and we were remaining really heavy, I was able to actually get positioned in this area. And I actually traded this pretty well, and I felt my intuition was doing me a pretty good favor on this day. So I'll jump over to the 15-second chart and kind of show exactly what it looks like. So this is that drop down. This is when you know they're not planning on returning into this area. We'll have this very efficient price delivery, very efficiently delivered, not a single fair value gap on the 15-second, showing that this is very weak. And they're not really wanting to jump back up there. Also, no retest of this 50s level. We're sitting very heavily, and I've got the narrative clearly in my head of this breakout in the PM session and this grind high, enticing longs. So I wanted to see it remain heavy. I also really like these 1 minute wicks. The idea is that typical retail patterns suggest that these long wicks suggest bullish support and bullish rejection. And because we spent so much time printing all these long wicks, you can imagine everyone trying to buy up these lows. So I was pretty confident in the short, and I was looking forward for SMT on the 1 minute highs, and we got that very clearly right here. And I jumped in short, and yeah, caught a nice winner to the short side. That worked out really nicely. At the same time, if we look at ES just happened to be sitting above the 300s quite nicely. And there was that same narrative on ES where we're just pushing into those 300s and eventually got below it. But they're acting as false support. And this somehow looks different to what I was looking at before. But then if we go to regular trading hours, you'll probably see some perfect lows at the 300s over here as well. But yeah, that SMT, as well as the facts that we were expecting to be very bearish, gave me confidence to get short in here. And where I ended up getting short was in this area here. We had this short-term high taken out. So right there. And once I saw that taken out and we began displacing lower on this candle here, I got short in this range, specifically inside of this fair value gap, and then that ends up being the perfect trade with that fair value gap holding nicely and selling off. I didn't hold all the way to my targets, unfortunately, but I was taking partials at reasonable places, including at these equal opening prices. That was quite key for me. And I actually added in as well. I added back on in this fair value gap, expecting this fair value gap to remain partially unfilled. And I wanted to add in more as we continued going lower, but then I missed that entry and just took profits before hitting the lows. We actually didn't even quite touch it. We fell just a few ticks short of the 900s. We then headed into this area, working our way higher. I still wanted that short. Obviously, we hadn't hit this yet, so I was like, oh, sweet. I missed this trade up here. I'll be able to get a short in this area. Took a few stabs at a short in here, and then I took another short here, and then I stopped out a break even at this area. So, it wasn't particularly clean. All clear, but luckily I stepped away, at least a little bit, and then as we hit it higher, let that load a bit, I figured that, okay, well, I'll get short up in this area. I don't think we'll go back above 23k until we've hit this, which I was completely wrong about. So I figured I'd get short there. I took profits down here, and I was wanting to add back in on the short side. And at this point, it's getting later in the session, already after 11. I've been trading since London, and we get to this situation where I was like, okay, well, we've got this not very clean looking impulse low. And I figured, okay, well, this is a model that I'm trying to develop. I don't know if it works that well yet or not, but it certainly wouldn't work well in this case where this is not really an impulse low at all. It's just a low. But once we take out that low, get a close back below it, I want to see that this high doesn't get taken out. So I was shorting in this area here and just get taken out right away. So my equity high was 380 on my top step combine. But then I ended up getting stopped out here, and then I left a limit sell in this area, and then I just took it out for like half an hour loss up here, just recognizing that, okay, this is just not working. In hindsight, you can see it's a bit of a market maker model going on as well, which would have been nice to have spotted, but yeah, really it's just pretty low probability at this time of day to be going short on a retracement up towards like pretty obvious buy side pulls, and also just trying to force a model where it doesn't exist. So I'll close replay mode. And it just kept on pushing higher all day. Then the next one is the last one to go over, and then I'll be done. YM. So YM, I most certainly could have done better with. I'm actually going to open this up on a different, just because I can't be bothered marking up everything I was looking at right then. Oh shit. So on YM, I wanted to see a short, and the reason why is because we have this really obvious sell side pull sitting down here. This impulse low, we then have these relative equal lows sitting below it. So you can see I marked out this liquidity pool. We did hit that and sold off a bit, but I was thinking, okay, rather than hitting this liquidity pool, I really like this fair value gap up here, which the reason being is that this is a 11 a.m. candle high, which tends to be a very significant liquidity pool. So I essentially wanted to get short at exactly that high, and I figured, well, it shouldn't go above this fair value gap, so just put my stop loss right there. So that was my trade idea from there down to there. And as we climbed higher throughout the day, I was thinking, cool, that's looking really good. I just want to see us hit that entry, and then I'll get short and look for a lower time frame place to add in as well. At the same time, if I jump across on this side, go to the 15-minute charts. At the same time, we had this really obvious long up to the previous week high on RTY. I was also extremely confident on this, and it actually played out nicely from a new model I'm developing. I haven't got a real name for it yet, but it's new day opening gap based VRP, where we had this previous day low sweeps, refer back to that new day opening gap, get back above it, support, sends us higher. But we hadn't hit this previous week high yet, and I was very confident that that would hit. And by the time I got my entry, which was, if we zoom in on this candle right here, you can see that RTY was still below that previous week high. So really, at an absolute minimum, my entry could have been on this candle, which would have been, at that point, well above where I wanted to get in. I could have completely avoided this trade. Or if I had gotten at this area here, I would have got a much better fill than right down here. So just slap that back on here. Don't know why it disappeared. But that was my original entry idea. Had I waited for RTY to hit that high, I would have entered on this candle. I don't know exactly what minute, but let's say it was, just slightly above the open of the candle. That would have been a much better fill, and I probably would have been able to get out at break even, which I did get out about here. when I recognized, okay, this is just not looking that good. But yeah, just a quick thing to note. I could have easily avoided that simply because this was really obviously going up here and we had not yet hit that draw. The next thing I might as well quickly mention how this looks. Go on the, I'll leave it here. But yeah, you can see this previous day low was taken out with this candle here. This is the lowest daily low that was rated. And then if we look back up, you can see this is the new day opening gap for that day. We consolidate below, get back above here, back below, then close back above. I haven't really figured out the perfect place to put stop loss, but so far I've just been looking at what if after we've traded above it, traded back below, that we use that low before we trade back above as invalidation, and you could just buy in this area, target the high. Could have worked pretty good. I've seen it play out multiple times just this last week and I only found it this week. So there could be some edge there, which I'll look into. So yeah, just want to go over that, just some of the things that I did right, some of the things I could have easily avoided today. And yeah, I want to be very specific with the trades I do take and try not to chase stuff, because I know I have edge, but I'm dulling it or diluting it by taking trades outside of my edge, or making up for not getting my entry by looking for suboptimal trades. So I just want to avoid doing those. Also want to get a bit more consistent with my risk management and my sizing. At the moment it's kind of based on feel and I'm down this much in the day, I'll just risk a bit more here, or I like this setup, I'm going to risk a bunch here, or it's very inconsistent, and I want to try and get more consistent with that, and whether that's just risk allocation per day or per trade or per risk, per confidence level in the trade. I think that's quite important, but there are also factors such as, is this even in my playbook? If it's not in my playbook, then why the hell am I trading it? So I just want to try and get more consistent with that as well. But I think to start with, just cutting down on the over trading. And in a video I'm watching by SMB at the moment, Mark Bellafore was talking about how his definition of over trading is any trade taken that isn't in your playbook. I've got a lot of setups in my playbook, and they're all ones in development, and I think it's fine to take trades that you're developing as long as you're risking appropriately so that you can develop those trades. But anything outside of my playbook I need to be avoiding, because the more specific I am with my trades, the more scalable it is. And I think it's important to remember, if I want to trade big, I need to be very specific with exactly what I'm looking for, which I'm working on and slowly improving it. But yeah, so that'll do for this review, and yeah, get after it again tomorrow.